Welcome to The Real Tea. I'm your host, Tammy Murphy, broker-owner of RH2L, bringing Miami Valley real homes to love.
And I'm Ellie Sollenberger to give my perspective as a home buyer.
We're going to give you the key to Miami Valley real estate.
And we're back.
Yes, more topics to discuss, right?
Right. So one of the things that I have some personal experience with, and I feel like is becoming more and more popular, is seller financing or land contracts. So I kind of want to talk about that today and see what your opinion is.
Yeah, well.
And what misconceptions are out there about it.
Okay. And obviously from a professional view versus the consumer view, there is a lot of, we'll call it ideas out there about the land contracts. Typically you see them come back and really make a strong presence when interest rates go up, when the criteria for getting a loan become more stringent. Buyers look for a way to be able to buy something, and sellers look for a way to be able to sell it, and a seller agreed land contract or a seller financing option becomes a little bit more of a viable option. So yes, is it something that can be useful and beneficial to both sides of the deal? Absolutely. But it is something that you want to go in fully aware, knowing what is involved with it and understanding what you're signing up for at that point.
So it was 2019, end of the year. I was looking for a home, but I knew that I couldn't buy because I still owned my home in Oakwood. So I looked everywhere I could possibly think of, whether that's Facebook, Marketplace, Craigslist, Zillow. And on Zillow, I searched by keyword, and I found seller financing land contract, and I found a home in Inglewood.
Yeah, and of course, she's using words that realtors don't like, but because she looked at it on her own, and then she makes the phone call. Thankfully, you make the phone call.
Right, because I did know that it's still a sale and that I do have the right to be represented.
For sure. And especially in this case, it was an actual realtor who owned it. Yes. And was putting that forward. So he obviously knows what the business is about and representing it on himself. So it was wise and smart that you did give representation for your side of it. And this was right before, we still had a strong market. So it was not as easy to find what all we were looking for in the parameters, but it was not the chaos of what we see here in 2024.
Right. We closed February 1st, 2020. So it was literally a month and a half before the lockdown.
Right. So we went into that with a rent-to-own scenario with the option to be able to buy it. And I remember us talking about, why are we doing that now? Like, you weren't sure that you wanted to buy the house, but as I explained, if we go in the beginning with that understanding, one, it gives more comfort to the seller side because you're vested in the process. So probably not going to just go in and be a typical non-caring tenant aspect where damage gets done to the property or anything like that, because you potentially see it as your own. Right. So you're going to take better care of it. So I like the deals where that becomes a vested part of interest for both parties. And it also was going to commit to that purchase price.
Yes.
At that time, before the market changes or anything like that, because we didn't know. We certainly had no idea that
it was going to jump as much as it did.
Yeah. And I remember, like, even after the first year when it was for renewal or something, he was all like, oh, well, if you need to get out of this, I'll let you out of this. I mean, he was very agreeable in that respect, right?
Right.
Because he really was hoping that you didn't want to follow through on those initial terms, because he would get the property back and you would have rented it in effect for that time period, and he would then immediately be able to charge more for rent or sell it for a higher price.
Right. So, we found this house. I loved it. We put an offer in, basically, and it was really his terms that he had already given to us, but we used your offer paperwork, and really the biggest thing was that it did lock down that price in. But I remember part of it was the interest rate that he set, the purchase price, and the down payment.
And then, so standard of a land contract, those terms that are in that agreement are really negotiable by the seller, by the buyer, what both parties are able to agree on. And, you know, similar to the purchase contract that we write, there's all of these procedures that go with it.
And I believe I had 3 years to get bank financing.
Yeah. Which, when you talk about the terms of a land contract, typically a land contract up to 2 years to perform on it, simply because of either the amount of dollars that you're invested in it or the length of time may dictate other things that can or cannot happen from the seller's perspective if they were to take the property back. So those are some of the reasons why land contracts have some specific language that you need to be aware of with your realtor, obviously also with an attorney if you are going that route, is to make sure that you understand what are your rights as the potential owner of the property versus the seller who's the current owner of the property, who's going to make the repairs. In most cases, you're vested in it so that you would make typical wear and tear type of repairs. But if something major happens structurally, you know, maybe there's a tree that falls on the roof, knock on wood that it didn't happen.
Right.
The seller still bears some responsibility because
he carried the insurance on ours.
Yeah. So we see this a lot come up with markets like we have now, where a little bit strict on what are the loan processes for a buyer coming into it. And not so much because of the interest rates, except that a seller may own the property at a mortgage rate that's less. So let's say you are a seller and you have your home that you want to rent out, but your mortgage on it is a 3.5%, or 4%. Current market is 7.5%, 8%. And if you're not getting a buyer wanting to buy because they don't want to be at that interest rate, potentially as the seller, you could offer it as a 6% interest rate, which is still covering what your costs are and giving you an uptick, but still undercutting what the banks are doing. So that's when we see a lot of land contracts will come into play when the sellers own it in the right position to where they benefit, not the bank benefits. Then the buyer is still benefiting from it because it's a better interest rate than they would get if they went through the bank, and so they're able to purchase in that way.
Yeah, and what I didn't know about a land contract is it is filed with the county recorder.
It can be.
Yeah.
So sometimes you may have a seller who is concerned about, well, if I record this, then does that cause my mortgage to come into play? So if they have a mortgage on the property, due on sale clause could be enacted that says, well, if you have taken a land contract on it, you basically have sold it, so now you have to pay us off. Well, that would cause a hardship for that potential seller in that situation. So in those cases, if they don't understand or they don't have the comfort, then they may say, well, we won't record it, but here's your copy and I have a copy, and we still have to understand that we're under these terms. They still can't do anything to leverage against the property, take out another loan or anything like that because you're an owner, but it may not be that it's recorded. So yes, it can be recorded, but it doesn't have to be recorded. That's up to the individuals and what the situation may be.
Okay. And we also went to a closing at a title company, just like a regular mortgage.
But the benefit there is that you don't have the loan origination charges that you have if you're doing a bank loan. Closing costs are much lower in comparison because it's a simple document that's being filed and the process that's being done. So oftentimes we see a land contract closing could be anywhere from $500, $750, or $1,000 depending, which again saves both the buyer and the seller as to that cost out of pocket. Now, sometimes you do see where the down payment on a land contract is going to be more. The seller may say, well, I want 10% down so that I know that you're really vested in it. And that's a comfort level that they may have, whereas the buyer, if they were getting a loan, may only have to do 3.5% or 5% down, right? Which is the key language that we used, is that we were doing a rent-to-own with the option to buy. And that allowed for us to come in with a deposit, security deposit, pay a monthly rent that then was going to get applied towards that purchase price as we set the terms for. So you actually didn't have to have that down payment as you would have with a bank scenario for a mortgage.
Right.
So a lot of situations that can be addressed, and again, based on the language and the agreements that you make, may cause something else to happen. So if a seller, and we've seen this, it's been a few years back, but sellers were requiring 20% down on a land contract. If they were putting it out there that they were willing to do a land contract, they were immediately asking for 20% down. And buyers were like, well, wait a minute. If you have 20% vested in the property by your way of down payment or the length of time that you've been paying on this, then the seller is forced into a foreclosure process through the court system versus just being able to file against non-performance of the contract and taking the property back. So good and bad, depending on what side you're on, as to why that would matter and what you would want to agree to. But oftentimes they have lower down payments and easier terms to deal with that makes that agreeable for buyers.
I mean, it worked for me, so.
Absolutely. And I love a deal when you do a rent-own buy with the option to purchase, because it's locking that rate in. And in your case, we actually tapped into the equity that then came about because of the market that changed.
Right.
Like 3 weeks after we signed.
Right.
And it's like, oh my gosh, I'm so glad we did that.
Yep.
So we were all in.
Yeah. So do you have a tip for anybody looking for a land contract or interested in being the seller part of the land contract?
Yes, I would say that the tip is to be open and understand, one, what you're willing and able to do, as we've talked about before, but in this perspective that there is more than one way to get the deal done. So it doesn't have to be this, this, and this. It could be an alternative, and land contracts are a viable option if that works for you. Seller financing along those terms, buy to with an option to rent, or rent to with an option to buy, is also another one of those options. So just make sure that you understand what each of those represent for you as an opportunity, and then work with somebody who's going to get you to the deal that works best.
Right.
Thanks for joining us today on the Realty Podcast. If you enjoyed the knowledge and entertainment today, please subscribe and share with your friends. We will be embarking on a journey that bridges the gap between realtors and clients, uncovering the heart and tea of real estate.